Hello, everybody, and welcome once again to Synanomics. There has been a big development out there in US regarding the debt crisis, so I thought I'll give a quick update to all of you on that. So it looks like Joe Biden and Kevin McCarthy, they have actually closed a deal in principle where they'll cut $50 billion and they'll fund $4 trillion to manage this debt crisis for the next 2 years. Surprisingly, the cut is only $50 billion, and that too is non-defense. Interesting. On one hand, US is funding so much of defense activities, including the one in, the ongoing war out there, Russia-Ukraine war. And on the other hand, they are funding or cutting just $50 billion. I think it's a pretty small amount. But anyway, the good news is that the debt crisis has been resolved. And definitely the market will see that in a positive way. Having said that, this will be 79th debt increase. So everybody was pretty much looking forward to that. Nobody had doubts that it will not be resolved, right? So in the last 60 years, 78 times, so why not 79 times? And Joe Biden has also commented that this will actually help avoid the recession, the millions of job cuts, and also a lot of the pension funds that was going to be devastated. So great news for everybody. Congratulations for the guys who are in stock market, for example. You might be thinking why this guy is congratulating us, but I'll explain that in a minute. So look at US economy. The gross domestic product is pretty much $26 trillion, and their current debt is $31.5 trillion, 120% of the GDP. With another $4 trillion, it will be $35.5 trillion, right? And according to one of the estimates, by 2030, it's supposed to hit $45 to $50 trillion. Now, the point is, where US is going to get this money to pay the principal and the interest? The answer is from nowhere. Because if you look at the world economy, the second largest economy is China, $16 trillion. The fifth largest economy is India, $3.5 trillion. So they're not going to get money to fund it. So what they will do, they'll print money. They'll continue to print money. And that's what is quantitative easing. So we are back to square one, where US was printing money and going through the quantitative easing. And where all this money will land, the one that I've been talking about, right? Almost $18 trillion. This $18 trillion, which is 31.5 to 50 trillion, right? So $18 trillion roughly will be pumped into hard assets like gold, crypto, stock market, and property to some extent. So good news for the guys who are invested in stocks. So you will see that market swelling or going higher in the next 5 to 7 years. And in fact, if you look at it right now, we are pretty much there. Most of the markets in the world is almost at 52-week high. Let me throw you some numbers. So Dow, for an example, has 52-week high of 34,700. And on Friday close is 33,093. So basically 33,100. Only 5% down from the 52-week high. Nasdaq, on the other hand, has a 52-week high of 13,181. And Friday close was 12,975. Almost 13,000. So Nasdaq is pretty much there. If you look at other countries, like Australia, for an example, is 52-week high is 7,400 for ASX 50. And Friday close is 74,047. Almost there. India, on the other hand, has hit a new record for Bank Nifty, 44,500. And even Nifty is pretty much there at 18,600. Sensex, on the other hand, is 63,500. So guys, most of the markets in the world are pretty much near 52-week high, and we are all fearing recession and worrying about it. And the fact of the matter is that Germany is already in recession. So this actually substantiates the fact that stock market discounts the future and not the present. So for everybody who is in the stock market, enjoy the ride. Now, just to highlight that, Nasdaq continued its bull run on the AI. I normally call that gold rush for AI, or the gold rush for chips. Marvell, on the Marvell technology, actually hit 30%. It increased 30% in one day on Friday. And before that it was Nvidia. So all these AI stocks are actually hitting 30% high in one day. Is it a bubble? Think about it. My personal view is that this is going to stay. The world is changing, and I'll actually cover a little bit more details in the subsequent episodes on this AI boom, because this is going to stay for longer. Right? So with that, give me your comments, your suggestions, and I'll look into that. Let me remind you that all these discussions and the opinions are my personal, and feel free to write your comments about it. Also, the different stocks that I discuss here is only for educational purposes and examples. Please don't make any financial decisions based on that. Consult your financial advisor before making any financial decision or any investment decisions. With that, thank you very much for your support. Please continue to subscribe, share, and don't forget to hit the bell icon. With that, once again, thank you everybody for listening, and goodbye from me. Bye-bye.